All right, guys, it's 5 p.m. market time. If you have a Twitter account or any social media, please retweet the tweet I put out about this or just create another one. Just please share this, get this out there. We just want as many eyes on it as possible so we can continue to grow. Real quick, as always, guys, few things I want to promote, and that's my broker, an amazing broker, hands down my favorite, and I think I have 5 brokerage accounts right now. I'm not going to talk bad about any of the other ones, but trust me, hands down, Cobra is the best for fees, for customer service, locatability. There's a link in the description if you want to check them out. It'll get you more than 25% off your commissions. It'll also get you the first month free of your platform, whether it's DOS, Sterling, or whatever you choose to go with. Spike Heat, guys, I've been talking about these guys for a while. I use them thoroughly. This is how I backtest data, historical stock data. And prior to these guys creating this product, unless you were a coder and able to create your own applications to do this, most of the setup backtesting was done manually. Spreadsheets, hours and hours of labor. These guys have really made a lot of what we do to backtest systems much easier. So check these guys out. Scripts to trade, these are my guys. These guys create indicators or scripts for Thinkorswim, TradingView. I think they're going to start looking at NinjaTrader or I think also maybe eSignal. Obviously most charting platforms have a way of creating your own scripts, and it's not easy if you're not a good coder or into that type of stuff. So these guys create amazing products, and they have a bunch of stock products already made, and they also can create custom ones. So if you think you notice something in the market that's happening on the chart and you want to find a way to maybe create a indicator based around what you're seeing, hit these guys up, and more often than not, you'd be really surprised they can make that for you. And then make sure you guys are subscribed to the channel and turn on the notifications. If you like what we're doing, leave it a thumbs up. But the one thing I like to ask of everybody is please leave comments. Let us know what you want more of. Let us know what you don't care for. And trust me, we got thick skin. I'm not worried about my feelings getting hurt. Just leave us some constructive criticism. Earnings for the week, guys, there's a lot of them. Remember, I don't talk about any of the earnings plays during the Sunday prep. I used to. It just felt like almost a waste of time, considering we don't know what's going to happen from now till the time those numbers come out. So I could tell you, oh, so-and-so is reporting on Tuesday after the bell. Here's where I think I want to short or long. And prior to it having those numbers, maybe pushes all the way up into those levels, and then those levels were pointless, right? So I did a webinar on how I personally prepare for earnings. I'm sure we can put the link to that in the description of the YouTube channel. I'm sure Raul is probably about to throw it into the live chat as well. So make sure you guys check that out if you want to understand how I trade earnings. There's a lot of them coming out this week. The one I want to point out that is just, I think it needs a mention real quick, is Dick's Sporting Goods, because I started a swing on it last week short, and people were asking me if I would carry that short swing into the numbers. No, I will not. At a very minimum, I will have locked in a partial. If there's a cushion, if there's a profit cushion, I will leave partial on, same way I did with the BLDR swing trade. If there's no cushion at all, I will go flat into the numbers, and then you can always put a trade back on. And that's an important concept, hands down, is the understanding that it's okay to take a trade off and not feel like that means you can't get back in later. You can. So that's the earnings at a glance, right? Those are the ones that are important that I care about. And you guys, if you don't follow Earnings Whispers on Twitter, you should. Makes it real simple to know who's reporting when. All right, so the topic I wanted to touch on this week is about sector rotation, and about how regardless of what kind of market type we're in, usually there's somewhere money is flowing into, right? So even though, I don't like to throw the term bear market around. I know that there is a black and white definition for it, and then there's a lot of debate about what really constitutes a bear market. But we're in a downtrend on the broader market, and obviously we'll get into that when we get to that section. But all you need to know right now is that the SPY and the NQ and the broader markets are making lower highs and lower lows. And that doesn't mean that there aren't long opportunities in the market. You just need to figure out where money is flowing. So the major sectors that have really caught fire recently were, and I know people will be like, that's hindsight, Ricky, because they've already took off, right? Oil, energy, commodities, especially the metals. But if you go back Sunday prep after Sunday prep after Sunday prep, you can go back months and you will see us talking about oil and energy and those ETFs looking extremely bullish. So it's not hindsight at all if you pay attention. There's always a way to see where money is going and where it's not. And the ETFs are a great way to see just where sector weakness is, where sector strength is. Now, by no means am I saying everybody rush into oil and energy names right now. You're going to see when we get into this prep, the majority of those names are well overblown, and most of them are on my radar for shorts. But that doesn't mean you shouldn't be looking for the next sector where money's going to rotate into. Obviously, there's a lot of macro stuff going on. In fact, we had a really big discussion in True Trader on, I want to say it was Friday in the chat, may have been Thursday, I can't remember. But it was centered around some people kind of having this idea that you can't really have swing trades in this market. And, I don't think, one, yes, bear markets make it difficult for swing trades, especially on the long side. But that doesn't rule all of them out. And you have to always understand that you can always swing something short if we're in a bear market. A downtrend is no different than an uptrend, right? In terms of the ability for the trend to continue via lower lows and lower highs, the same way an uptrend has to continue via higher highs and higher lows. So one, you gotta, if you find it impossible to short, if that's not your thing, then I can understand maybe that statement of there's no way to be in swing trades right now. But I think it also centered around this fear that there's so much headline risk because of the Ukraine-Russia conflict going on that you can't put a swing trade on. And I would like to just mention something is, for anybody watching this, if you go back over history of any long high time frame chart, you'll see trends, whether it's a weekly chart, a monthly chart, a daily chart, right? And for, as long as the stock is making higher highs and higher lows and that uptrend is continuing, do you think over a 2 or 3 year stretch of an uptrend that there wasn't headlines that came out during that uptrend? And did it ruin the uptrend? That's the thing that you need to be asking yourselves. People get so worried about headline risk. Maybe if you're staring at a 1 minute chart, right? But if you're talking about swing trades, if you're talking about letting the trend pay you, you are crazy to think that these headline risks should be so important that they would ruin a trend. Now, if they do, then you just have to be objective and say, look, this trend was higher and it's not any longer, and now it's coming lower. Now we're making lower highs and lower lows, and that's just being objective, right? And I wouldn't even go as far as say that it was the headline or the macro environment that ruined that. It was just the trend ended, and that's what it is. So, be objective, read trends, and understand that, like, if you want to swing trade something that's in an uptrend, especially on a higher time frame, if you look at like weekly charts or even higher, like a monthly chart, you don't have to worry about day-to-day headline risk. You just have to worry about the trend continuing, and that's it. And the other part was just hammer back home on the sector strength, right? And where is money rotating into? So, at the moment, all the money was going straight into the metals, the oil, the energy, some of the defense stocks, right? But smart money was already in there. So when things really take off and get parabolic, you have to understand that the smart money is not buying that anymore, right? They are probably locking in gains, selling. They may look to re-enter or buy more on major pullbacks, but they're not. Smart money's not buying into a parabolic move. And so keep that in mind too as you look at sectors and say, oh, this sector is really strong. Of course, if you look at if you go look at crude futures, or you go look at some oil names or energy names, you're going to see charts where you're like, yeah, that's a strong chart, but it's also very extended. And so you have to understand that the smart money's not coming in anymore, and that's why they're going to be on my watch for shorts this week. There are other stocks, and that's the other thing. Like when we get into, it was really hard to find a lot of decent quality looking long setups for this week. And you know, when I do these Sunday preps, I want to have these ideas for you guys, but like at a certain point when I'm like trying so hard to find an idea, there's a little thing in my brain that kicks in and says, if you have to look this hard for it, it's not there. Okay, so there are a few, but when we go over those, when we get to the long ideas, I'm going to point out what it was that made these ones feel like, okay, these are okay ideas for the long side. But understand the backdrop right now is we are in a downtrend on the broader market. And if things continue lower, then these things don't necessarily have to take off and go anywhere. All right. So that's it. Let's get into the disclaimer and then we'll get into the broader market. Guys, neither I, TrueTrader, or any of its representatives are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. Everything I talk about is actually just for entertainment purposes only. All right. Oh, I did it again, guys. I constantly forget that I have to relink this to the charts. Hold on one second. There we go. Here's your charts, guys. Sorry about that. So this is the ES. This is the weekly chart. And like I said last week, guys, I think I'm going to I'll stop drawing these or putting in these alerts live because it eats up too much time. But we will talk about the alerts as though they are my levels of support and resistance, okay? But just broader idea at the moment, I want to point a few things out. So on the weekly chart, we are still making lower highs and lower lows, but we are kind of getting a bit away from the weekly 20. We are right down into the monthly 20. Which is a very key area for support in terms of how stocks move via a trend. There's always like different scenarios I can picture happening, and I want to plan for all of them, right? So first scenario would be, you know, maybe we start to build a base here, and this can go sideways. I don't know how long it would want to. The longer the better for as far as what we consider a stock developing a healthy base, right? And what you'll notice is the weekly 20 and the weekly 50, as we start to go sideways, these two will pinch, right? We'll start to get this compression in those moving averages. And, you know, things may look nice and tight on a daily chart, and then you look at it on a weekly chart and you realize these things have a lot closer together to become before we really get compressed. And that compression happens from a base being built. So if we go sideways for a while, there may be a base that gets built that's long enough and healthy enough for us to make another move. And maybe this correction does come to an end. Remember, we don't know if it's going to be the type of 2008 and 9 correction or the dot-com bubble correction, you know, where the market loses over 50%. Or is it going to be like a 2008 or a 2018 or a 2015, which was more, I think, in the realm of 20 to 25%. I mean, we can just go look real quick. This was 2020, 2018 was here. Let's see, 2018 was 21%, give or take. Whoops. And 2015, 15%, right? So we don't know. And obviously the 2020 was quite a bit, but that was the pandemic, and it was also not your typical bear market, right? I mean, we lost 35% and it rebounded in very, very short amount of time. It was just like a straight V bottom off the lows. And, you know, I mean, we don't need to get into all the fundamental stuff like the Fed nonstop printing money and zero interest rates and stuff that kind of help push this higher. But what I was trying to get at is we don't know which kind of bear market we're in right now. We don't know if we're going to continue to go lower or if this is going to be more of a shallow one. What I will tell you is there's going to be signs to look for so that we don't have to have a crystal ball, right? Remember, March has kind of got that catalyst of the Fed going to finally raise their rates. So we'll see what happens as we get towards the end of the month. Now, if this wants to trigger along, the way that I would want to see it happen is I would like to see last week's lows broke, but I would like to see it break and not lose these lows. Okay, so basically what I want to see is bears come in and try to take us lower and fail to get back down to the lows. If they can do that, if this next candle can break last week's lows and not come any lower, then the break back over last week's highs is a very nice long trigger. And what it may in turn produce would be the ability for the possible lower high on the monthly chart. Okay, so again, even if bulls are able to do what I just said, it doesn't get them out of the woods. There's still a lot of ground for them to cover and a lot of resistance for them to get through before any sort of end to this correction can be stated with confidence. Now, if we weren't able to even test last week's lows or come lower and we just keep pushing higher, until we get back above these highs up here, we still could very well just be working on another lower high on this time frame, okay? And if that happens, then we can come lower. Every time they try to push us higher, imagine what's the mechanics going on in the market, right? We can switch to a daily chart and kind of check this out. So every time we have these big sell-offs, you get people coming in and trying to find a bottom, right? And when they finally do look like they found a bottom and it starts to push up, there's some that are locking in profits. A lot of people move their stops up to the lows, right? They say, and I'm talking about longer term people with bigger money, right? I'm not talking about your small time day trader retail guy, right? Even though they should be doing these things too, but big money comes in and they're trying to find support down here and they push this up. Smart people know that if we lose these lows, that thesis was wrong and that the bottom is not in, right? And so every time we push up and then lose the lows, you get your next leg down. And so the same thing has happened again, right? We put in this this is pretty convincing looking candle here, and it's been straight up, but it ran right into the smack of the underside of the 20-day. So what happens if they keep pushing up? Maybe we go into the underside of the 200-day, but then it just rolls over and then we lose these lows. Well, you get your next leg down. And that process continues until they work everyone out. Again, this all circles back around to the fact we don't need a crystal ball. We literally just need to know what to look for on different time frames to see when has the trend shifted. As long as we're making lower highs and lower lows, guess what? The path of least resistance is down. Now, let's go back to the weekly. If we can start making higher lows and higher highs on a weekly time frame and then start getting above levels, then we can start to stalk the bottom of this correction and looking for levels where we can put capital at risk on long ideas with defined areas of where we would be wrong, right? Until we start to see higher lows on the weekly chart, though, I'm not interested at all in anything longer term on the upside, okay? So that's pretty much what I wanted to point out on the SPY and the ES. The same thing that I just went over is going to definitely apply to the NASDAQ as well. So I won't waste a bunch of time talking about the NASDAQ in those terms. I will point out levels of support and resistance. So you'll notice I have these ones labeled S for support, right? Let's try a different time frame here. So obviously we have this support here. This one right here, if you read what the alert says right there, it says last week's lows broken. Why would I want to know that? I want to know if we break last week's lows so that we could possibly be starting to put in that higher low on the weekly chart. Remember, as long as it breaks last week's lows but does not break these lows, then we may be working on that higher low. So that's what that alert is for. And then we obviously have this support down here at the 42.28 level. And then there's another one down here. I guess I could just mark this real quick. This is definitely a key level of support that you don't want to see go. All right, and then to the upside, you got the 20-day, above that the 200-day, and then above that we have that 45.86 level that was really important, right? So let's go over to the NASDAQ. Let's get on weekly chart. Now remember, NASDAQ has still been the weaker of the two, right? The tech stocks have still, keep getting pummeled. And what I would like to point out is remember, there's a lot of stocks, and I guess I should wait till we get into the oversold reversion setups, but maybe I'll just reiterate it when we get there. When we're in a bear market and we don't know how low the bottom's going to be, go back in history and study like the 2000.com bubble or the 2008-2009 great financial crisis, and look at companies that people thought were really strong, great companies that got cut in half, 50% haircuts, and people started buying them because they thought this is a really good deal. How these things can't go any lower, right? But if you don't know where the bottom of the bear market is, don't be surprised if some of these names can take another 50% haircut from where they were. And so you really, really have to have risk management and be disciplined. You cannot overstay when you're wrong. Now, if you're short and you're riding the trend, then you just stay in it till the trend ends, right? The trend will tell you when it's time to get out. As long as it's making lower highs and lower lows, you can sit in your trades. But if you are trying to pick a bottom, you're trying to fight the path of least resistance at the moment, okay? So that's what is important about understanding that when we don't know where the bottom is, some of these names that, the Facebooks, the PayPals, the Squares, the Rokus, the names that like people are like, dude, they've gotten slaughtered. Don't ever say that something can't go lower, because it can take another 50% haircut. You could get demolished, and then it could bounce and be a face ripper, and you just sit there, with your jaw on the floor, knowing that you just got obliterated. Don't be that. So again, you can see I have the previous week's low marked, the previous week's high. I do have some levels in between there. Let's see, this is 14,268-ish. Remember, these are areas. They're not like written in stone. I just want to know if we spike up into these. You see all these tops here, right? This is a 2-hour chart, right? So this is pretty high intraday time frame. It's into the underside of the 20-day. You have that previous resistance from a ton of other areas. Next spot up here is 14,638. Then you have the 50-day, and that, dude, the 50-day and the 200-day and the 15,000 psychological round level and annual pivot. That 15,000 level on NASDAQ to me is just like, that's going to be a very, very key level the first time they're able to get up there and test that. You can see the last time they pushed up there, which was, let's see, early February, major fail. Okay, so, and we're pretty far away from it right now. It'd take a lot to even get up there, but if we do, that's a very, very key spot for me. So let's jump into Bitcoin real quick. Let's see here. Now, Bitcoin got, it triggered, we had set an intermediate alert over this high right here on last Sunday prep, I believe. I think we did it in the Sunday prep. If we didn't, it was in True Trader chat room. But, we were basically saying over this high should push us up into these levels. It did, but it didn't get to where it needed to, right? So at the moment, it's still kind of stuck in la-la land here, trying to pick a direction. Now, the thing is it could just be coiling, right? If we don't come under these lows here and instead just push back up, make a new lower high, then come make a higher low, and it just gets tighter and tighter and tighter, eventually that's going to break and we're going to get a direction. At the moment, there isn't one, right? So still the same levels hold until we either break these lows down here from 30, let's just call it 33K, or we break over 46, I believe it was. Yeah, like that 46,000 level. So anything in between there is probably just compression or building a base. Above 46K, and we may finally be getting out of this downtrend. Below that 33K, and we could really roll over again. But again, no need for a crystal ball here. We just say if this, then that, right? Keep it simple, guys. Now, I wanted to add one little thing to this broader market stuff, and that is some of the commodities, right? I just want to point out some of these commodities. This is gold. Gold's looking, that's a very bullish looking chart at the moment. It looks like it could speed up. If it speeds up, there may be some parabolic names that get ready to be in short territory, at least for a near-term fade. Crude, straight up, like you'll see when we get into some of the short ideas. Here's another important one, wheat. This is a crazy chart for wheat. So this is all stemming from the macro stuff, guys, like Ukraine, Russia. You can go look up, there's, imagine a large country like Russia. They need a lot of wheat, or they need a lot of supply to feed that big country. And if I'm not mistaken, I think I actually read somewhere that they actually produce quite a bit of wheat, and so it may have to do with not being able to get it imported. But these are macro type things, and if you're not paying attention to the commodities, I guess I've been doing a disservice this whole time by not covering them a little bit. But they're at the point now where when you start to see moves like this, we got to pay attention, because these are going to produce some A+ setups in the near future. So let's get into the sector analysis real quick. Let me get the ETFs up. I'm going to get into bar chart real fast. Here's your sectors. Here's the matrix. Now, obviously, energy was the strong one, energy and oil. Utilities have caught fire. Some of those charts like Duke and what are some of the other, like Dominion and DVN, and have been straight up. Now, everything else, it was really, really weak. The ones I wanted to touch on, I mean, we'll go through them all. Let's just check them out real quick, one by one. Retail, some of the retail names have been making some moves up into resistance, which was why we kind of got short on Dick's. Dick's pushed into levels that we had talked about. You've had quite a few of them that reported earnings last week and have given trades, but the sector in general, like overall, is still very, very heavy and still has a lot of resistance to cut through before I see any kind of long setups on these names. Finances the financials are one that I really wanted to point out. You see how we definitely have now fallen out of this channel, right? We talked about this last week. If they were able to get back in that channel and not spend too much time outside of it, maybe they could get things working again, but we definitely rolled over and have struggled. The one thing I will point out, I don't think it's a short just yet, because we've had four bottoms in the same area and we're way off the 20-day. But I do feel like one of these pops back into like this 38 to 39 area is going to be one of those last pushes for the bulls, right? I think they're going to make a push into these levels, get stuffed, and I think this level that we've held 4 times is going to break, and then we could really roll over. I mean, it was one of the last sectors that was still holding on, if you recall. It was this one, and other than oil and energy, of course, but it was this and consumer staples that were really still looking bullish, and so now we're kind of losing one of the last ones. Real estate, remember, I don't really trade a whole lot in that sector. There's actually quite a few sectors I don't really trade much in, but we still check them out, okay? We're coming right up into the underside of the 200-day, right up into some of these resistance levels. Again, keep in mind, it's the same for all these sectors when I talk about, they're pushing right up into resistance. Even if they break some of these resistance levels, they still have their work cut out for them to show that they can pull back and make higher lows and find some strength. Because at the moment, they're not. They're still making new lows every time they roll over. Healthcare doesn't look too bad. It is right into some serious levels of resistance, though. We still have this alert set from, I don't remember when we set it, but it still holds, right? Over the highs from, what was that, February 9th. That could get this thing going. I wouldn't chase it. If this sector breaks that level and triggers, I wouldn't chase anything. I would wait to see if, like we just said, if pullbacks after start to make higher lows, because we need to see some sort of confidence from the bulls that things are really turning around. Building materials, industrials, yeah, another two that I don't really trade much of. Again, same looking charts as well. Just kind of like getting consolidation under some levels of resistance. Not sure they're going to break above or not. I think they look more apt to roll over. Here's utilities. Like I said, utilities caught a bid, and not exactly, when you see things like utilities going, it's not the best look for saying that a bull market is ready to resume. Sorry, guys. Some consumer staples still looks really good. I would like to see us break above this little trend line here and then get another push higher. Lots of names in that sector still look really good. Discretionary still looks like trash. Communications, we got that flush out, remember, and it did spike. Now what happened was, this was one of the ones we keep talking about being pretty oversold. I think they went and started the bear market for the whole rest of the market, but you have to be objective. They've pushed into the underside of the 20-day and it's rejected. So moving forward on this sector, what it needs to do is we need to get a higher low on the weekly chart. So, and I don't see that being a difficult thing to do as far as what it takes to start that process. First thing that has to happen is we got to lose last week's lows. Well, we closed almost at the low, so it doesn't look too hard to accomplish. All we need to do is break last week's lows and not make new lows. That would get us started on the possibility of a higher low on the weekly chart. And if that develops, then we'll have our long trigger over these highs here. Let's just go ahead and set an alert for that. So if we can get a little higher low here and then break above these highs, we got a lot of room back to the underside of the weekly 20. But again, nothing has to happen. Don't ever say this can't go lower. Just stay with the trend. As long as it's making lower highs and lower lows, lower she goes. Don't fight the path of least resistance. But if it makes a higher low and then it breaks this level, then we have the possibility of putting capital at risk in individual names that have nice looking charts. There's a lot of names in this sector, right? Biotechs, again, remember biotechs, we had hoped that we were gonna not come back under these lows, and I was giving it the benefit of a doubt because this tail down here that broke this low didn't spend any real time down there, never closed below it or anything, but now this week's candle or last week's candle, it's pretty ugly. So I'm honestly not interested in this trigger up here anymore. I'm going to actually remove it. Don't care about that trigger anymore. I think this is coming lower. We may come down here and test this 70 level. So again, hands off, and that's what keeps our capital safe. We don't have to play guessing games and try to find a bottom. We can just wait for the author, the trend, to tell us when the bottom is at least trying to form. At this point, there's nothing about this that looks like it's bottoming. So let it do its thing. Tech still looks heavy, just like the NASDAQ. We can go to a daily chart and check it out. Actually, take the pivots off there for you guys. Yeah, so we do have some support down here at this 147 level. I think if we come under that and then start hitting our heads on it, that's not going to be a good look. We'll have to see how that develops. And then, of course, energy and oil. So, guys, look at these charts. It should not be a surprise at what I'm looking for on these individual names when you look at the sector. So, I've had this alert set, I think, for a few weeks now, right? We didn't set this very recently. It's been there. We know that this 79 area is going to be very key for this sector, okay? And we're speeding up into it. You guys have to understand, most of what I consider A plus is not just the level, but it's how it gets to the level. This thing shoving hard into 79 without any real breather is going to be so A plus in the near term, right? Stocks can't just go straight up forever. They need to move via a trend. And if all it's done is just go up, 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 guess what? That's not a trend. That's just parabolic, and that needs to blow off, and it's going to give us a really good opportunity in the short term for some really good fades while this thing resets. That doesn't mean it can't go higher. It just needs to reset first, because the move can only sustain that speed for so long. So remember that, guys. It's really important about how the stock gets to a level, not just what the level is. And so oil has a very similar area. Let's see if we can find it here. So oil has two spots. There's this one here up at 134, 135, and then there's these highs from way back here. So it's got if it's going to come up here, it's going to take a lot longer to do. It's not going to be, it probably won't be this week. But this level here, this 134 to 135 area is definitely doable this week. And there's a lot of names, guys. Like I keep saying this, there's a lot of names that are flirting with these areas, or flirting with similar charts that are going to give us A plus near-term opportunities. You just got to be patient and let them come to you. All right, so that's your sector analysis, guys. Let's get into the actual ideas. Sorry if this is kind of getting a bit long. CVS is the first one, guys. Let's look at CVS. So, all right, you'll have to excuse the the swing trade idea on there. I like to keep these on the chart so I can always see the ideas in hindsight. This was an old idea and it worked. So, I mean, whatever. The way I want to play this is the reason I like this chart is, one, it's been in such a, look at this big picture chart is beautiful. This thing is set up, you know, we just came down and touched the weekly 20. It's trending very well. And what I'm looking for now that, you know, you got that compression between the daily 20 and the daily 50. What I want to see is either a clear of this 105.70 area, and then I'll look to join trend on dips, or I want to buy a flush into anywhere against Friday's low a day and use that 101 to 102 area as my risk. We'll see what we get. It may not even it may not produce a trade. This could be something that I could see consolidating, maybe get a little tighter, a few inside days or something, and then it might be later in the week. But I do have it on my watch for Monday in case we do. Here, I'll set the alerts for you guys too right here. So either over this level or into these lows. Either way, there's a trade at either end of that. And why would something like this be interesting for a long? Because even when the market has been getting beaten, like destroyed, this thing's just been up and away. That's what you want to see a stock doing in a weak market if you're going to try to long it, right? Next one, net. Now remember, net was on last week's prep and it didn't ever come to our level till later in the week. The level was that 101 level and we just pushed and now we've pulled back to it. Now here's the thing. When it made that push, it triggered the long on the daily chart. What do I mean by that? Well, this yellow circle was drawn to highlight this high from February 10th. We broke that high ever so slightly. And ever since we broke that high, it just got wrecked. Now, there's a few things that can happen from here. Whenever I see a stock that kind of triggers a breakout like that and then immediately retraces a large portion of it, it really reminds me of the GE chart where this was set up for a breakout up here, it broke and then just slammed and it was just bagged everyone. So like you don't want to just step in and start buying it until it shows the ability to hold over certain levels. It got over this level and it could not hold. So I don't want to be buying it just because of the break. But I want to point out, here's the weekly chart. Look at this chart. Okay, so very similar thing happened over here. You got this breakout and then it slammed down. Notice the difference between this area and this area. When it happened over here, there was no highs up here to target. Now it's happening over here. We have these highs for targets, okay? But once it slammed down, it developed the exact same setup, right? So here's your low, intermediate high, higher low, and then it broke. But as soon as it broke, it slammed down. But what did it do? It never lost these levels, right? So I feel like this might be developing over here in the same manner where we got our low, intermediate high, higher low, and we triggered. Come down anywhere in this 80 to 75, or not 75, 78 level. I want to possibly be anticipating this and be getting long with risk under the low of 76.61, right? Under 76.61, this idea is broken and I don't want to be involved in it. But I may anticipate on a flush down into the 78 to 80 range, and I'll show you why. Here's the monthly chart. And this is, look at, you'll see this is the monthly 20. This same setup occurred here. When that triggered and rolled over, you got the higher low on the monthly chart. And I'm hoping that's what we do here. I want to break February's lows, but not break January's. Does that make sense to you guys? I want to come down in this range and make a higher low for the ability to get back over this 120, let's just call it 123, okay? To get back over 123 and get this thing really ripping. So I am willing to put an anticipation trade on this with defined risk, right? I know under 76.61, I'm gone. I don't care about it. And I will size appropriately so that if I get stopped out, it's no big deal. It's whatever I choose to risk on this trade. But the risk reward is so skewed in this. Like honestly, The very first targets are, there's nothing really in front of it. We can use a weekly chart and try to set some more. So you got 140 is the weekly 20. That would be the very first spot where I anticipate having to consider locking profits, okay? And if you're getting long in the 80 range, and then you have the ability to add when we break over 123, you're going to have a really good risk reward on this trade, especially if it goes to target. And the weekly 20 is just the first place where I would even consider the necessity to take profits on a swing trade. Technically, this setup should get us back to highs. Now, obviously, growth stocks been getting destroyed. Do I think that's going to happen anytime soon? Probably not. But when you're looking at a monthly chart and you're finding a swing trade based off the monthly chart, even if this bear market lasts for another few months or whatever, as long as this doesn't lose 76.61, when the bear market does finally decide to bottom and trend shifts, something like this could be set up beautifully for a big push back to its highs. So I like this setup, but I think there's a day trade in it too, right? So I'm looking, what did I put down on the thing? Let's see. Yeah, okay, so I would be willing to day trade it on flushes down into 86 with risk under that week's, let's see, I think this was the previous week's, not last week's, but the previous week's lows. So I would buy it flushing down into 86 if it does it emotionally for a day trade. But remember, we lose that level. I'm very interested in starting a swing position on this as an anticipation trade. Remember, the difference between anticipation and confirmation. Anticipation, much lower win rate because you're trading in the win rate for the risk reward. The risk reward on this is going to be phenomenal. I'm willing to do it. Again, you can always stop out and re-enter if a new setup emerges. So keep that in mind, guys. Next one on the list is UPST, and I want to give a shout out to Simon, and I'm sure he's in here. I see him, Irfan. Simon's a member of True Trader, and me and him were discussing this. He pointed this setup out last week, and we were discussing. He was saying he likes the 50-day. I said I don't even mind the 20-day. But what I'm going to do is I'm actually going to see if we can get a flush a little bit lower into that monthly pivot, that 114 area, and get us closer down to this little trend line we've been developing and see if this thing wants to hold support and bounce. So shout out to Simon for the idea. This is one of the great strengths of having the whole True Trader community is everybody's kind of got their eyes everywhere in the market looking for really good opportunities. And this is a liquid stock with a lot of range. And I don't mind this bottoming action, right? This looks a lot like what it did over here. So if that's what's happening here, if we're just bottoming and gonna hold support, I want to be a part of it. So I'm looking for a flush into that monthly pivot. Just call it 114.50. All right. And that is it for the long ideas for strong stocks looking for continuation. So the next section is oversold reversion setups. Now remember, I said I was going to reiterate this. The squares. Look at this. The squares, the Facebooks, the PayPals. So here's the thing about these names, guys. We talked about this last week. The only way to play these is to assume you have to create a hypothesis. The hypothesis is if you're trying to be long, the hypothesis is that the lows got put in. That was a really high volume, it could be. These could be the bottoms. They made their push. I said the only way to play them now is we have to admit we missed the move if you're not already in it, and you need to be buying flushes with risk, defined risk under these lows. So here's the thing. You have to understand a lot of people already bought these bottoms and are probably selling these pops. And if we lose these lows, this is what I wanted to point out, guys. It's so imperative to have discipline and stick to your stops in this market, because if you don't and everyone else does, if you start breaking your rules and disobeying your stops and your levels of risk, when everybody else jumps out of this trade because it breaks these lows and you don't, this could be one of those ones that takes another 50% haircut from here and become, people did this with Peloton. They did it with like every freaking stock out there, Roku, so many names just kept coming lower and people go, let's buy some here because how much lower could it go? like I said, use historical references. Go look at stocks in 2000. Go look at stocks in 2009, and you'll see there was levels where people started buying, and then the levels didn't hold. They rolled over, went lower, and some people didn't obey their risk and ended up having to try to just average down, average down, average down. Eventually what happens is everyone pukes it, you get capitulation, and then you get a true bottom. So the Squares, the Facebooks, the PayPals, the Rokus, all those names, if you're trying to long those names, you need to be telling yourself right now that the lows are in, and that's where we're risking. So like, you know where you're wrong. When you know where you're wrong, you can size appropriately, you can put a trade on, you can do it responsibly. It doesn't mean they're going lower, but it does mean if they try to go lower, you shouldn't try to go along for the ride. So there's only 2 names I have in this section for myself this week. First one is GM. And GM, I'm kind of upset at myself for not getting part of this big short, because this moved up with Ford along with all the hype behind the electric vehicle stuff, right? But I like this level down here, this 40 area. If you look at the weekly chart, this 40 area, you can just draw a line straight across. You have the weekly 200 at 41. So I feel like we flushed down a little bit further. You can see we're getting really far away from the weekly 20. I will be watching GM for a flush out into about 40 to 39, right? You have the quarterly pivot at 39. It may not even get to us, but again, I don't even think I need to find the bottom on it. I think if this flushes out in the morning, I can just wait for higher lows on an intraday time frame, define risk, put on the trade, see if it trends. So that's GM. And the other one was McDonald's. Mickey D's right into the monthly 20, guys. This is, I like this candle on Friday. So flush down into the monthly 20 and then a nice little hammer candle. Looks like it may be trying to reverse. So my plan is, hopefully we get a flush down towards Friday's low a day, can scoop some up with defined risk, right? I will not still be in this trade if it loses Friday's lows. So it's also let's see, I just want to make sure I covered everything. The one thing I did want to point out about it is, even though it trades 3 to 4 million shares a day, if you look at like a 1 minute chart, this thing trades really thin. You see the volume here? So it's going to be a slower trade, but I do really like that level, and I think it could be a slower trade where you can just kind of size appropriately. You don't have to take a ton of size if you just want to put this on and let it work, but it will be a less liquid name, and I do like to point that out when I put these kind of names in the Sunday prep, because preferably my favorite stocks trade very liquid with a lot of range. So this one doesn't quite fit that bill. I did want to kind of make sure I disclaim that. So that's it for the longs, guys. The next section is shorts. First thing we're going to look at is weak stocks looking for continuation. First one on my list is Marvel, MRVL, and they had earnings on last Thursday evening, right? And this is the one where Jim Cramer told his whole investment club to be getting long ahead of the earnings. Like, I can't even wrap my head around that. Hopefully, if you follow me, you guys know it is not smart to take a position in a name heading into earnings, because it's just a gamble. You don't know what the market's going to do, even if you really believe in the fundamentals of the company. I've seen companies put out spectacular earnings with great guidance, and the market just shits on them. So I can't wrap my head around Jim Cramer putting his investment club into this name, moving into the earnings numbers. And look what happened. It ripped, but then it just closed. It gave the whole move back, closed on lows. This thing looks really, really weak. So I'm looking at this, what did I put? 6506 is what I'm looking for. So you got the quarterly pivot at 64.95. Next week's weekly pivot is 6506. And I just think that any pop back up there, anybody that was long this, that got bagged on Friday, is going to be looking to exit. So any spike back up into these 65s, I'm going to be interested in a fade on MRVL. The next one on this list is Futu. And the Chinese names have really looked pretty weak. You'll notice this thing, if you look at a weekly chart or even a monthly chart, this is a major continuation short trigger, right? We've been riding the weekly 20 down. It's just down, down, down. Here's your push up, higher low. It pushes into the weekly 20, doesn't quite get there, but then we slam and we break these lows, right? So I'm thinking pops back in the levels, have people trapped and they want out. So I really, really like this idea. I like this setup. I like the fact that on a higher time frame, it just triggered a major short. Again, it's not a short like a reversal trade. It's not like the short from up here, but it's a continuation of the trend. The trend has been down, and now it's telling you, yes, we're making new lows again. That's a trend continuation. So let's take a peek under the hood at some lower time frames and see what I'm looking at. I'm looking at this 37 area. What did I write down? Yeah, just put the 37 area. So 3707 is your monthly pivot. Any kind of spike. I love this name. It always trades a lot of volume. It's liquid enough to be in and out of, and it has range. You can't ask for much more than a $30, $40 stock that trades tons of volume and has a lot of range. Sometimes you get one or the other, right? You get something that's really liquid, but it trades like a 60 cent to $1 range, or you get something that has like $3 of range, but it trades like less than 1 million shares a day. I love the names. Like when Lucid was really liquid, AMC is why I love AMC. It's so liquid and still moves a point and a half, whatever, every day. Futu's right up there with them, right? Liquid and range. So any spike up into this 37 area, I think, is good for a fade. I'm gonna get a real quick drink, guys. All right, moving on. The next idea is CPNG. This is the last idea from this section. Again, earnings. They had earnings on, I want to say Thursday. I don't remember if it was Thursday morning or Wednesday night. But the reaction after the earnings tells you the whole story, right? The market's not happy with this. They think it's going lower. It's been in a downtrend. This is what we like for shorts, right? You want to know what looks good for a long? Flip it upside down. Uptrend, pull back to support, right? It's very clear when you keep it simple, guys. So this is in a downtrend. It had earnings, got slammed. I think any spike, you got the 20-day, the 50-day, and you got Thursday's lows. And check out how these line up right here. You see all these tops right here with Friday's low, or not Friday's low, Thursday's low. This area, boom, boom, boom. Now we're under it. I want any spike back up into that area. So what did I write? 2360. That's the spot for me. Can check it out on another time frame. Yeah, just right up in this sweet spot. Just draw a line straight across. Spike up there on CPNG. Hopefully it's liquid enough. Let's see what the volume is on it. Yeah. I mean, it's still going to be trading probably close to 10 million shares tomorrow. So we should be good on the volume. That's it for this section. Now, here is the big section for this week, guys, and that is overbought reversion setups. There's no shortage of them. And the thing I wrote down is, with this many names all going parabolic on the daily chart, it's a very high probability that at least one of these is going to set up A++, okay, for this parabolic blow-off type setup. So the first name on the list is MOS. Been straight up. Now listen, every single one of these, the higher the better, right? I can give you levels that I'm interested in, but I'm not trying to find a top. Everybody in TrueTrader will already know this. I will short into the parabolic move, but I have scalp mentality covers on those names, right? So if something goes parabolic, let's say MOS, let's just take a look at this. The levels I have on it, 64. Now, what I like about this one is when you look at it, first glance, you think, oh man, it's making all-time highs. It's not. Zoom out, guys. This is heading into levels, okay? So you can see this 64 to 65 level is major for this name, right? So I'm very interested, especially because of how it's moving into the level. This is going to be on my top of my watch, that 64 to 65 area, okay? So if this rips off the open, 64, 65, I will hit this into the parabolic move, and I'll have like a 1 minute 20 SMA as my first target, and possibly a 5 minute 20 for if it wants to come even lower. But once I get those first targets and I'm locking in my profit, these are the kinds of setups where I will re-enter when I start to see lower highs, and I'll have set risk over the previous high, and I'm gonna let it work because these are A+ setups when it comes to the fact that these moves are getting overdone. If they blow off, they're gonna give back a lot of this move. There's no reason to think that if we find the top on MOS, and please understand when I say find the top, I don't mean guess the top. I mean when we identify the top, via the trend telling us that it's over, right? Lower highs, lower lows, and time frames start to collapse. Then we have defined risk, and there's no reason to think that this doesn't make its way back to the 20-day. 20-day is currently at $48. There's so much meat on this bone. It doesn't mean you have to hold for the 20-day, but don't sell yourself short. Don't be taking, now granted, when I short the parabolic on this, maybe I'll take a point and a half, 2 points or whatever on that scalp. But when I re-enter, it's not for a point or two. Okay, these are the kind of trades where if you let them work, these can really grow your account, guys. But you have to be disciplined, you have to be patient, and you have to make sure that when you are wrong, you stop out. Don't think things can't go higher. Same way that we always say, don't say it can't go lower. These names, there is a lot of macro stuff going on that's causing these names to move. Make sure that you don't get stubborn and get caught on the front side and do the add thing. That's not going to cut it on this type of stuff. You'll blow your count up. All right, moving on. Next one on this list, KR. This name, it blows my mind that Kroger has had this kind of move. This thing gets a little bit higher, and I think it's going to be a really nice trade. I'm looking at 63 as the first spot. Again, we spike 63. I will short it parabolic with front side style covers, right? Flushes back to the 1 minute 20, flushes back to the 5 minute 20. I'll be covering. But then if it starts to make lower highs, I will be re-entering the trade and looking for the bigger picture. That what I just said about KR and MOS, apply that to every single stock in this section, guys. I'm going to think the same way, right? Parabolic off the open, I'm shorting with front side covers, right? 1 minute 20, 5 minute 20, maybe VWAP. But lower highs after that, and I've locked in profit, I'm re-hitting and looking for the bigger picture, all right? Keep that in mind for all these names. Next one, AA. Again, moving with all the metals, right? The commodities. Levels here, 96, what did I write? 95 to 96, but if that doesn't work, I have no problem getting a paper cut on it and reevaluating this on that psychological 100 push, okay? No pivots up there or anything, but yeah, I have no problem trying this again up around 100. But I think it's going to all of these are eventually going to give very, very nice A+ setups when the trend is ready. And it can go as high as it wants, right? As long as you know how to read the trend. If it's making higher lows and higher highs, we're not ready yet. We're not there yet, right? When it blows off and then it makes a lower high and we start to come down and break levels, then it's getting ready. Then we have defined risk and we can put a trade on. And that still does not guarantee that it won't go to new highs and stop you out. So make sure you have bulletproof risk management, guys. Yeah, so that's AA. Next one was OXY. Again, going with the oil and energy sector, blow off into, what did I write on this one? 65 to 66. Is this another one? Yeah, this is another one that's not all-time highs, even though you might have thought that if you didn't zoom out, right? So look at these levels here. Let me draw it. Got two different areas. This one, which we're almost already there, and then up here, these areas. So, here's the thing. We're really close to this level. Let's zoom it back out to the daily chart. Oh, crap. Hold on one second. I need to make those drawings appear on the daily. Sorry, guys. And if you don't know how to use TradingView, you might learn something here. Oh, there we go. All right, now we'll see it on the daily. All right, so you see how close we are to that. Now, I'm not going to short a parabolic move into 57, even though there's a level there and the monthly. It's too close. I want a blow-off type of move in order to do that. That means the 65 to 66 area is that spot for me on Occidental. But if it's not going to get there and it just rejects that spot, the bigger picture idea still holds. We still start to make lower highs and stuff. I may put this on. I would much rather get the 65s though, right? I want The more extreme it is, the more A plus it is, because the edge lies in the extremity. The fact that it cannot sustain that speed of a move for that much longer. This right here is not quite extreme enough for me to be salivating over. 65s, different story, okay? So that's OXY. Next one is BTU, and I sold this swing in the I sold this swing up here. I can't believe how much further it's gone, but it is what it is. This is blowing off into the 30s for me. 30 is the spot. I think that's what I wrote down, right? Yep, blow off into the 30s, okay? So I'll short the parabolic. I'll have parabolic frontside covers, 1 minute 20, 5 minute 20, maybe VWAP, but I will look to re-hit on lower highs if it starts to set in, because this is bigger picture. Like I said, and you guys, if you're trading these names, have up XOP, have up USO, have up the crude futures, have up XLE. You guys need to know the sectors that these are moving with so that you can see relative strength and relative weakness, okay? So that's BTU. Next one is AEP. AEP, what did I write down? 101 to 102 area. Yeah, now that is from here. You guys can see what I like about, whoops, hold on. I want to show you guys something. So when this was the end of this big move, and ever since then, it really struggled, right? So what you got right here was a high, a pullback, a lower high, and then when it broke this level right here, that's where the move died, right? So that's a pretty important level for me. Let's just draw it further across, and you'll see lines up with our levels, guys. We've got a quarterly and annual all up in that area, and we know that that was where that major breakdown happened way back in 2020. This was the March 2020 COVID stuff, okay? So this thing was in a nice strong uptrend, boom, crushed. Never got back up there. First test of that level, I definitely want to be involved, especially if it's parabolic into it. Again, parabolic short, parabolic frontside covers. Lower high afterwards, put the trade back on, and bigger picture idea. That's AEP, CF, another one. This one has been really taken off. You notice how the candles are starting to get a bit longer. I want that trend to continue. I want expanding range. I want a speed up. 98 is the first level I'm looking at, but I'm not married to it. I will reevaluate at 100 again. I like those psychological round levels, guys. 100. This one is all-time highs, I believe. Yeah. Okay. And if you guys were wondering if all-time high somehow meant it was not, I'm not gonna mess with it, not for me. I fox with it. I do, but I have good risk management, and I trust myself. NTR is the last name, guys, and 100 is the level. Again, shouldn't come as a surprise. I like those psychological levels. NTR up into the 100s. Is this one? I think this is one that's a level from previous. Let's see. Nope, it's not. Yeah, shove up into 100, and I'll be treating it just the same way I talked about every single name in this section. Let me check the questions real quick and see what we have. Evan says, do you watch for 13 GS for smart money flow? I'm not sure what you're referring to with that. When people usually, are you talking about, I'm not sure what the GS refers to. Sorry, maybe if you want to clarify your question, I will come back to it, okay? Dan says, don't you think what happens in Ukraine near term is going to dictate how high up down the market goes? Near term, yes, I do. But when we're starting, so the futures are open, guys. This keeps happening because of what time we do the Sunday prep. So look, we already got last week's lows broken, guys. Let's go ahead and real fast pull up the NQ, and we can start to talk about some things here. Okay, so no matter how low this comes, as long as we don't take out these lows here, and then it turns around and pushes higher, we would have our first long trigger on the weekly chart since this downtrend has started. If that happens, then maybe we can start talking about what the bulls need to do next to show that it's an actual push with strength that might sustain. But again, this is just the first step in a process. If we just lose lows, we can definitely continue lower, guys. Let's see. But so here's the thing. Like I said, and I think when you might want to correct me if I'm wrong, but when I read this question that Dan was asking, I feel like he's asking it because of what I said about headline risk doesn't really control trends. When I say that, make sure you understand I'm talking about longer, higher time frames. So daily chart is like the lowest time frame I even consider for talking about long-term trends, right? Really, we're looking at weekly and monthly charts. But like I said, go back over any period of history, whether it be, go pull up charts from when we had the Afghanistan war, the war in Afghanistan, the Iraq stuff, whenever we had Desert Storm, whenever we had whatever kind of headline risk you can think of, go look at it and ask yourself, during this period of time, did stocks still trend? Did trends still hold? Did markets still continue to, like, without, if you look at the chart, would you have known that there was headlines coming out? Because oftentimes you'd be surprised. The answer is no, because the trends are always going to persist until they decide to shift, right? Now, if a trend changes, if you're looking at a weekly chart, I mean, let's go ahead and just, we have a weekly chart right here. You can go ahead and just look at it. Like here's a stretch, right? This is 2016 to 2020, okay? This whole way up, do you think there weren't major headlines that came out all the time? This is like from here to here. It's a whole year, right? Of course there's headlines that come out, right? But when you zoom out and start looking at bigger pictures, you realize that those are oftentimes, maybe it caused this dip here. But guess what? When you look at this on a daily chart or an intraday chart, this might look scary. But when you zoom out, you realize it's just a pullback in an uptrend to support. So headlines come out all the time, but it didn't matter. Look at this right here. This was that late 2018. I'm sorry, this is early 2018. This is the late one. But these pullbacks here, those are major pullbacks. If you're looking at a daily chart or an intraday chart, those are scary. But guess what? The trend held. Still made a higher low here. Still made another higher low here. Still made higher highs here. And the trend continued. So it's not so much about, do headlines matter? They matter. But what really is the only thing you need is the trend and the chart. And what does the trend tell you? And because if you want to look at headlines and think you're going to trade with headlines, the problem is you're always going to find someone else that thinks that headline means something else, or this is bullish, no, that is bearish. Like, there's always conflicting opinions. The only thing that there's not really a conflicting opinion about is a stock making higher highs and higher lows, or the opposite, right? This is something that keeps you objective and without bias. If you can just look at the trend, it allows you to just focus on what the author of the story is saying, and that is price. Simon says, if we are in an uptrend and the stock pulls back, is there a way to think about where the higher low might form? Yes. Well, let's see. Let me reread that real fast. In an uptrend. So not what we're in right now in the broader market, but yes and no. So, like, for instance, this is a weekly chart. You could look at this and pretend it's a daily chart, right? When we pull back here and push up, we're into the 20, right? So we already know stocks like to trend on the 20 on every time frame. So you get your pullback to the 20, you push up. You don't know that this is a higher low right here. But what you do know is that if it breaks this level here, it's confirmed. And so once we do that, then we can assume that the uptrend is continuing. Now, again, if this were to trigger like this and not make it to the highs, you get the opposite, right? You get the failed long trigger that creates the short under these lows. So it's not so much about, for instance, like net. I think net is a good example of what Simon's asking, right? We don't know if on the monthly chart, this is if we lose February's lows here, we don't know if it's going to make a higher low. That's the whole point of identifying from the onset that this is an anticipation trade. I am anticipating a higher low. Why would I do that? Well, because we've come all the way down into the monthly 20, which is one of the higher time frames, the monthly chart, and we've pulled back to one of the major levels of support. And when I start to see this, I start to think, look, it's buyers are showing up here. So if we're going to make a higher low, I think this is the spot to do it that would look the most bullish. But again, we're anticipating it. We don't know. And until we do it and then break above these highs, we have zero confirmation that our thesis is correct yet. Hope that answered your question, Simon. Let's see. Grandizer, look at Roblox. Roblox still in a downtrend, still looks like shit. Like, okay, let me take, this is a good example of just being objective and reading what the author is writing, okay? Prior to, let's see, let me get all that off the chart. This all looked good, right? Getting nice and tight, takeoff. Now, fast forward to what we have now. Objectively, lower highs, lower lows. Underside of the 20, lower high, lower low, lower high, lower low, lower high, lower low. Look, it tried to reverse right here, and then earnings came out and it slammed down. There's nothing about this chart that looks promising at the moment. Nothing. There's no reason to be getting involved on the long side on something like this. Do you guys remember what I said in the prep about the difference between something like this is a stock that's in an uptrend, right? Now, if I flip this upside down, now it looks like Roblox. Should be like, boom. It's so obvious. It's so black and white. You want, when the market is in a downtrend, you don't want to put money at risk on the long side unless your stock looks strong. I know UPST, you might be able to make an argument. This has been a downtrend, right? Now look, from here to here looks like Roblox. Does that make sense? Do you guys see that? Do you see how this is in a downtrend? But look what's happened now. This is different. This is what Roblox needs to do before I even give a moment's thought about it. Okay? It needs to go from what it looks like now to this. See that? See how it's missing? It was trying over here, but as soon as it ran into the daily 20 and the underside of this trend and earnings came out, splat. Okay, so I don't see, let me look through the chat and see if there was more questions. Yogi's trying to trade. I'm trying to see it. There's a lot of comments, but I'm trying to like isolate which ones are questions. Hold on. I see. Yogi's talking about I'm gonna have to sell my Occidental. He's talking about Gilligan's 13G. I'm not familiar with that. And listen, it was Evan asked that, right? The Gilligan 13G for what was it? It was for smart money flow. I don't, and I've never heard of it. And listen, I am very, very different from any other know-it-all on Twitter out there, guys. The second you guys ask me a question about something I don't know, I'm not going to sit here and pretend to friggin' know about it. I don't know what it is, and guess what? I'm interested. I'm going to go look it up because I love learning new things. But I will tell you this. The question was in regards to smart money flow. I don't think I necessarily need to look at that to see smart money flow because sectors show it through the charts, right? When smart money comes in to a chart, there's a footprint, right? Volume, huge volume. Huge volume, unless it's at the top of a very long uptrend, right? Huge volume only comes in from big money. Retail doesn't leave the footprint of high volume. Now, when that happens at the top of a very long uptrend, that's oftentimes distribution by the same people, right? The big money. And that is not something you really want to see. But again, I'm not going to sit here and pretend to know something that I don't know the answer to. And that's just the way it is, right? Like, hopefully you guys can understand where I'm coming with that. Let's see. Oh, he was saying, is this supposed to be filings? 13G filings. Oh, okay. I think he was. All right. Now I understand what you're saying. 13G filings. Filings are 13G showing ownership, big ownership, or institutional ownership in companies. No, I do not. I mean, I definitely pay attention if I like a certain stock. I will pay attention to like, oh, who else is buying it at the time. Not at all though for like sector rotation. I'm sorry that it took me so long to understand what the question was. Yogi's asking me to look at STLD. I'm going to tell you the same thing about STLD that I talked about Alcoa, and that is it's going parabolic, and the only way I would ever long something like that is after a major reset. Let's see. The reality is you'll have to read a ton of 13Gs to find sector rotation. Exactly, Yogi. Plus, it's not always like immediate. Oh man, don't get me started on AMC, guys. Maybe we'll do a whole 1 hour episode on AMC one of these days, but not today. Guys, I think we're gonna cut it here. Love you all. I hope you guys got some insights from this, got some trade ideas. I want you guys to understand I'm dead serious about the things like Facebook and Square and stuff. If you're looking at those as possible longs because they got oversold, if the market rolls over and makes new lows and those things make new lows, make sure your risk management is airtight. Do not fight it. Do not try to bail yourself out. Stick to your discipline. Your discipline is what will buy you a career. You know, you can make money today by breaking your rules, or you can make money for a lifetime by having discipline. It's up to you. Everybody stay safe. I'll see you guys at the market tomorrow. Have a great rest of your weekend. Peace.